Do you know that in the Singapore market, there are actually 11 Hong Kong stocks that you can buy just like any other normal Singapore stocks? And how do you do that? Well, you can do that using what we call Singapore Depository Receipts, SDR. And in this video, right, I'm going to share with you guys 3 of the top stocks, right, the top Hong Kong stocks that is listed on the SGX as SDR that you can potentially put in your watch list for more upside. Are you ready? Let's go. So the first stock I want to share with you guys will be this stock called Bank of China, one of the largest bank in China. Bank of China is just one of the 11 stocks that are right now. You can see that I have this list of stocks right over here. We have Alibaba Group Holdings, Bank of China, which I'm going to go through in a bit. We have BYD, one of the EV companies, right? HSBC, Tencent, Meituan, Xiaomi Corporation, Ping An Insurance, and there are 3 new Hong Kong SDR that are listed on the SGX starting from 23rd of June onwards, right? 23rd June 2025. So they are JD.com, Semiconductor Manufacturing, or SMIC, and we have also PetroChina. So which are the top 3 out of these 11 stocks? Let's find out in a bit. But I'm going to dive into the first one, and that would be Bank of China. This is Bank of China, right? The code is 3988. This is the one that's listed on the Hong Kong Exchange, right? So let me just go to minimize this, and you can see that from the chart, we are at about $4.52 Hong Kong dollars, right? So this is the one that's listed on the Hong Kong Exchange. It's about $4 and I would say we have been in a pretty good longer term uptrend for Bank of China, I would say, since last year, right? Look at the 100 days moving average, the red line and the blue line, both pointing up. So very strong uptrend in the longer term. Of course, in the short term, we did see a bit of a pullback just by looking at the green 20 days moving average line. Look at this, right? A bit of a pullback, rebounded back up, pullback here somewhere in November, rebounded back up very strongly. So very strong long-term uptrend. In the short term, it goes down, but each time it rebounds, right, it goes even higher to find a new high. So what we can do right now is that I can quickly turn on my One Good Trend Pro indicator and take a look at if there are any bullish or bearish signals on the chart. So let's take a look at it right over here. Let's turn it on, and there we go. So you can see this is Bank of China, and we had a couple of bullish signals coming out on Bank of China since like September 2024. Look at this, 1, 2, 3, fourth one coming out, and it moves even faster. So somewhere in April, when Trump introduced what we call sweeping tariffs, well, we actually got a bearish 1 GT signal. So not so good, right? You can see the green 20 days moving average line started to turn down as well in terms of the short-term trend, turning down, right? But that's where, it could be a good potential to maybe think about getting in on dips again, all right? Especially if we see new bullish signals coming out. And yeah, true enough, right? After about 1 month later, we got new 1 GT bullish signals coming out, and we are currently seeing some pretty good support around the $4.40. So $4.40 would be what we call a support level, right, in terms of Hong Kong dollars, right? So a potential trade could be near this $4.40. And if I can quickly turn on what we call the trailing support, right, from my One Good Trend indicator, right? This trailing support just gives us an idea of what are the support levels whereby we are above, and then it accounts for space. It gives the stock what we call breathing space. It is also somewhere around the $4.40 as well. So I think this 440 would be a very key level. It's a horizontal support, plus is a trailing support as well. If Bank of China were to hit even higher, this trailing support will follow it as it moves even higher while giving it space to breathe, right? So I think it looks okay. All right, in the short term, well, you can see green line slightly pointing down. Hopefully it starts to stabilize, flatten out, and maybe even point up. I think that would be a good sign whereby some bargain hunting is indeed coming back, right? So what we could do right now is that for Bank of China, right, you could go ahead to buy this stock on the Hong Kong exchange, but you don't have to do that because right now, as I mentioned, right, you could actually buy Bank of China, the SDR, right, that is listed on the SGX, the Singapore Stock Exchange. So how do you do it? Well, very simple. First of all, you can see that on my chart, I've drawn some pretty key horizontal support price level. So you can see, right, $4.40 will be the Hong Kong dollars support. But if you want to convert it to Singapore dollars, right, in order to trade the SDR, right, the Bank of China SDR, I'll show you guys in a bit. What you could do is just to take $4.40, right, times the exchange rate of 0.16. So $4.40 you times 0.16, that will be the price in Sing dollars. And for this SDR or underlying, right, there's a ratio of 1:1. So very simple, right? You just take $4.40, you times 0.16, and it will be 70 cents Singapore dollars, right? So Singapore 70 cents, right? That would be like the support level. Same thing, the resistance 480 times 0.16, Singapore price would be 0.77, and another resistance maybe at about 83 cents Singapore dollar. So now that you can take a look at the SDR and take a look at where could the potential entry be. So 70 cents is the support level. Let's take a look at the SDR right over here. So this is Bank of China, right? You can see the Hong Kong price is 4.53, right? The code is 3988, pretty much the underlying that I've analyzed. But if you take a look one row down, this is the SDR, right? Bank of China space HK, which stands for Hong Kong space SDR, and the ratio is 1:1, and the code is HBND. So you can see the price is about 0.7457, 0.74. So I mentioned that the support could be anywhere near that 70 cents. So if the Bank of China SDR to fall to near 70 cents, that could be a pretty good entry, or to think about maybe getting in to ride the reversal all the way back to that 77 cents, which would be about the $4.80 Hong Kong dollars resistance level. So let's move on to the second Hong Kong stock that you can actually buy on the SGX. Is what we call the SDR, Singapore Depository Receipts. And this stock is none other than Xiaomi Corporation over here. You can see this is Xiaomi. So we have Meituan, Xiaomi, Ping An. Alright, it was launched on 5th of March 2025. But let's just focus on Xiaomi right now. So you can see that Xiaomi, alright, the code in terms of the underlying listed on the Hong Kong Exchange would be 1810. But later I'm going to share with you guys the code for the SDR, right? So this is Xiaomi at about $53.70 Hong Kong dollars. So pretty strong rally, I would say. Look at this, right? The longer term trend has been up. Look at the red and the blue line, very strong uptrend since last year. In fact, we had a couple of bullish signals, right? One GT bullish signal coming out right over here. That was around 16 Hong Kong dollars and went all the way up to about 50 Hong Kong dollars. Very strong rally, very strongly. I would say that would be about 170%, right, in just about 7 months, right? Very strong rally. We got a bearish signal. It starts coming down, I would say, in April when Trump unleashed the tariffs, right? Many of stocks got hit, right? Even Xiaomi got hit as well. The short-term trend turned down, bearish signal came out, and down we went. So we want to wait for what we call a new 1 GT bullish signal coming out, and even the trend in the short term turning back up, right? And that has happened. I would say that has happened somewhere around like end of April, 30th April. We got finally a new 1 GT bullish signal. So the longer term trend, as I say, the red and blue line there has been up since last year, so that's fine. But we want to wait for the short term trend to also turn up, plus a bullish signal. So it has happened, right? Pretty good. We have pushed up from like about 48 all the way to $53. So I think right now we are pretty much consolidating, all right, just above the $50, right? $50 psychological support level, all the way to 60. I think 60 Hong Kong dollars would be a little bit of a resistance. That was where we have sold off since like February. Right, came down, and we're still kind of like below it. So I think the range is like 50 Hong Kong dollars to 60 Hong Kong dollars. So what could be a good entry for Xiaomi Corporation? Well, from this underlying, I would say a good entry could be anything near that 50 Hong Kong dollars, could be 51, 52. I think anything on dips there, you can see that that's where some bargain hunting has started to come back. And the green 20 days moving average line that was pointing up has started to just slope sideways a little bit. It just means a bit of a consolidation. That's fine. I mean, as long as we hold above the support level, I think that is fine. All right, and we can also turn on what we call the trailing support level from my One Good Trend Pro indicator. So you can see that this trailing support has popped out right when the 1 GT bullish signal came out. So you can see this trailing support followed, all right, Xiaomi as they push even higher, right? Up, flat, now it's somewhere around that 48, slightly lower below $50 Hong Kong, right? Why? Because this trailing support give it space. It accounts for volatility, so there's some space below it, all right? So it's slightly lower. So anything above 48 or maybe even above 50, I think it still looks pretty okay. All right, so how could you actually think about buying this stock right now in terms of the SDR that is listed on the SGX? So very simple. First of all, let me just do a quick price conversion, right? So 50 Hong Kong dollars is where any dips near there you could think about getting in. So 50 Hong Kong dollars, you want to convert it to Singapore dollars. So 50 times 0.16, that would be the Singapore price. But then what you want to do is that you want to divide it by 2. Why? Because in terms of this, right, there's an underlying to SDR ratio is 2:1. So in order to get the SDR price, you need to divide by 2. So 50 times 0.16. So very simple, right? So take $50 times 0.16 and then you divide it by 2. Well, that would be $4. So later I'm sharing with you guys the SDR, but that is pretty much the Singapore dollar price in terms of the support level. What about the resistance, right? Resistance would be 60 Hong Kong dollars, so 60 times 0.16, and then you divide it by 2 to get the SDR price, because the ratio is 2:1. So let's take a look at Xiaomi SDR. So you can see that this is Xiaomi underlying stock. The code is 1810, the ones that's listed on the Hong Kong exchange, right? About 53.65 Hong Kong dollars. And if you look down, that is where you can actually buy what we call the Xiaomi Hong Kong SDR. So the ratio, as I mentioned, is 2:1, all right? And the code is HXXD, all right, HXXD. You can just simply type the code on any trading account and you will be able to find this SDR. And the price is about $4.40. So I remember, right, I talked about this support level whereby, we convert it from Hong Kong dollars to Singapore dollars. It is close to like $4. So that's like $4.40. So I think if it nears that $4 or even near $4.10, $4.20, that could be a good entry in terms of a rebound all the way back up towards the $4.80 price. That would be the resistance in terms of the Singapore price level. Alright, so we have covered Xiaomi, one of the world's largest consumer electronics company in the world. Let's move on to the third Hong Kong stock I'll share with you today, and that would be out of these 11, right? That would be one of the newest SDR that's listed on the SGX, right, as SDR, and that would be PetroChina, right over here. PetroChina at about $6.69 Hong Kong dollars. So let me just go to minimize this and we look at the chart a little bit clearer. All right, so what is PetroChina? Well, PetroChina is the largest oil and gas producer in China, right? It does with oil and gas and new energy, engaged in exploration, development and production as well, in crude oil, natural gas, and also many of the new energy sources, right? So let's take a look at it right now from the chart. You can see we are $6.70 Hong Kong dollars, and I'll not go too far, but every time we had a couple of like bullish 1GT signals over here. You can see that that's where we start to see a very strong rally. Of course, when we see a bearish signal, it guides us to get out, right? Not buy the stock, just want to be more patient, right? So you can see it starts coming all the way down. So let's zoom into what has happened, I would say, over the past few months. Well, right, we got 1, 2, 3 bullish signals coming out since early of May, all right, and we have started to see the rally or the reversal of this stock all the way to near that 750, 740 resistance level. So I've drawn some very key levels. You can see that this support, okay, let me just go to turn on the trailing support level, right? Look at this, right? So this is a trailing support, right? We got the first bullish signal, the trailing support that gives the stock space to move up, popped up, it follow, up, flat, and you can see it's right over here, somewhere around that $6.60 level. So let's put it at $6.60, right? It's pretty much where we want to be above for more upside to potentially happen, right? So now it's $6.68, so it's very near the $6.60 Hong Kong level. So you're going to convert it to Singapore dollars, right? To buy what we call the SDR, what you could do is just take $6.60, you times 0.16. And for this PetroChina stock, right, the underlying to SDR ratio is 1:2. So in order to get what we call the SDR price, you need to times 2, all right? So very simple, $6.60 Hong Kong dollars, you times 0.16, and then you multiply by 2, and that's where you get $2.11. So same thing over here, $7.30, that's where we have seen a little bit of a resistance here, right? Just last year, May, all right, that's where we sold off as well. So that could be a resistance where we touch and we sold off as well. So $7.30, you times 0.16, convert it to Singapore dollars, and you multiply it by 2 to get the potential SDR price. So it's about $2.34. So what you could do right now is to take a look at the SDR, do the same thing, right? Take a look at the SDR, and the code for PetroChina, all right, is HPCD. I say again, HPCD. That is pretty much what you can buy on the SGX, like what I've showed you guys for Xiaomi and also Bank of China. Yep, so there we have it. These are pretty much the 3 top, I would say, Hong Kong stocks right now. Out of the 11 stocks that are listed on the SGX as SDR. So this is a kind of a video to share a little bit more on SDR, a bit of a collaboration with SGX as well to add more value to you guys. All right, and I hope you have a better idea on how to actually do a conversion, right, in terms of the Hong Kong dollar price to the SDR price and based on the ratio as well. Right, so Joey here. Thank you so much for watching. If you found this video useful, go ahead to hit the like button, subscribe as well, and I look forward to share more with you in our next video. Take care.